Welcome everyone to Vested Interest. This is Shane, and before we get into the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thank you to those who have subscribed to the channel. I really do appreciate it. And if you're one of those out there who's been watching the channel for a while and who has not subscribed yet, go ahead and do that now. Hit that subscribe button and hit that notification bell so you are notified whenever we drop any new videos like these portfolio updates every Sunday. I have a stock pick of the day series Mondays through Thursday, as well as I typically cover stocks I'm watching for the month. If you haven't watched those videos, I put one out a couple weeks back for stocks I'm watching for December. And then I always cover my stocks, dividends paid out from the stocks I own in the portfolio at the end of the month as well. If you'd like me to review your portfolio, go ahead and drop it down below and I can send you my contact information, as well as any suggestions you have for stocks that you are watching, stocks you want me to do a deep dive on. Go ahead and drop them down in the comments below. Now, for those of you who may be stopping by the channel for the first time, well, it's not rocket science. In my opinion, the best way to do anything, keep it as simple as possible. So it really boils down to consistently investing, buying dividend growth stocks and growing companies with positive cash flow that covers the dividend, companies with a high return on their invested capital. I utilize both a dollar cost average approach, consistently investing into the stocks within the portfolio on a minimum of a bi-weekly basis whenever I get paid. It's really typically every week, and that's what these videos are, my weekly portfolio updates. Again, they come out on Sunday. I do cover all my investments into this portfolio on the channel, all the movement, any sales, any purchases, any dividends paid out. I do not have a paid Patreon account, nor do I intend to ever have one. We all have enough to pay for, so it's free to see what I'm doing in this portfolio. But if you'd like to help out the channel, like I said, dropping a comment, liking the videos, most importantly, subscribing to the channel helps out tremendously. It helps out a little YouTube channel like mine get the word out. So again, if you haven't done so, go ahead and hit that subscribe button. I also will include a link to my Webull account down below. So if you use that link and deposit any money into that account, your account, as a brokerage, you would get some free stocks. I would get some free stocks as well. That is a way you could help the channel. It is perfectly fine if you don't use that link, but if you do not have an investing account, that is one that I use. I also use Ally Bank. That's where my main brokerage is. I do not cover any of my investments into the Webull account. They are more speculative in nature. They don't typically pay dividends, so it's more on the growth side. And again, some of them are really speculative. And in that account, really, I throw in about $120 every week. So it is not near as much as the around $1,300, $1,400 that I invest in my dividend growth portfolio. It is a very, very small portion of my overall investing strategy. With that said, we are going to look at this week's portfolio update. You will get this information on December 11th, Sunday. And I did add $1,392 in new capital to the portfolio. We'll also take a look at any dividends paid out. And with that said, let's not waste any more time and let's jump right into the video. And we will start with any dividends paid out for the week. And as you can see, on December 6th, we were paid some dividends by LyondellBasell Industries, ticker LYB, $126.59 paid out in dividends. And we do have the DRIP set in this portfolio, so that's dividend reinvestment plan. That means anytime a company pays out dividends, those funds are automatically reinvested into the company that paid them out. So LyondellBasell Industries paid out $126.59, which bought $126.59 or 1.50544 shares of ticker LYB, which is out of the material sector. Then on that same day, December 6th, Johnson & Johnson paid out $60.64, which picked up 0.33944 shares of J&J, that's the ticker, and this is out of the healthcare sector. All told, that $187.23 paid out on December 6th added $8.70 in annual passive income. So this is the part of the snowball. These positions were already in the portfolio. I've already paid for these stocks. So this is the portfolio growing on its own. This is what they call that dividend. Part of that dividend is snowball, where if I stopped adding to the portfolio now, it would continue to grow by the dividends paid out, and this annual dividend income would continue to grow as well. And that's what it's really about, the passive income provided by the portfolio in the forms of the dividends paid out. In my opinion, that is the best investing strategy because I never have to sell any shares to get the dividends. And as long as they remain good company with growing free cash flow to cover the dividend, that should remain a dividend payer, right? We shouldn't see any dividend cuts so long as we're watching the company, making sure the revenue is growing, the free cash flow, which is what the dividends are paid out of, is growing. And I like to stay with stocks unless they're REITs or something like that where they're required to pay out more. I like to pay or stay with stocks that pay out 75% or less of their free cash flow and dividends. And that leaves them 25% to reinvest, to pay down debt, buy back shares. Some companies do that as well. But here we are on, this says December 30th. Sorry, I didn't change that date, but it was actually December 6th. I added 1 share of Verizon Communications, ticker VZ. This is out of the communication sector at $36.67. I added 3 shares of Enterprise Product Partners, ticker EPD. This is out of the energy sector. Added those 3 shares at $24.24. We added 2 more shares of Whirlpool Corporation, ticker WHR, out of the consumer discretionary sector. And those 2 shares were added at $140.16. We added 10 shares of Ally Financial, ticker ALLY. This is out of the financial sector. And these last 3 purchases are from my dividend stocks to watch for December video. So if you haven't watched that, go ahead and check out the channel and watch that. These are the 3 I'm focusing on. Obviously, I'm focused on anything that pulls back within the portfolio as well. But these 3 I want to continually add to the portfolio this month. So hopefully they stay down. Actually, Owens & Corning and Stanley & Black & Decker have kind of ticked up a little bit, so they're above the purchase price here because these are 2 new positions I added, Owens Corning and Stanley Black & Decker. And with that, so we added 4 shares of Owens Corning, ticker OC. This is out of the industrial sector. We added those shares at $87.45. And like I said, I believe it's around $90 now, so it has gone up since we made this purchase. But we will continue to add to it because even at 90 and some change, it is below what I feel is fair value. We added 4 shares of Stanley Black & Decker, and that wrapped up the purchases on December 6th, and that was SWK, and those 4 shares were added at $76.91. This is another one out of the industrial sector here. And all told, $1,296.54 was added on December 6th, and that added another $52.64 in annual passive income. Now we did add a little bit more on December 7th. Again, sorry for not changing the date here, but December 7th was the day we added another $95.66, and we picked up EPD, pulled back a little bit more. Actually, I think it has pulled back even more since this purchase, so I may add additional shares to Enterprise Product Partners, ticker EPD, out of the energy sector. Very nice dividend payer here. So we picked up 4 more shares on the pullback, $23.92. All told, $1,392.20, the $95.66 and the $12.90 and some change that we saw on the previous slide comes to the $1,392.20. This purchase of Enterprise Product Partners added another $7.52. And then when I add the new invested capital as well as the dividends paid out for the week, that total passive income added came to $68.86. So this is that snowball continuing to grow, getting bigger and bigger every week by the dividends paid out from the stocks already in the portfolio, as well as the new income we add to the portfolio, the new capital invested. So that's what it's all about. Passive income generated by the portfolio in the form of dividends. And again, take a moment to hit that like button if you find any value in this content. Share with someone that you think might find value in the comment. Drop a comment down below. Let me know what you think. What did you add to your portfolio? Any of these shares in your portfolio? Let me know. And hit that subscribe button. Don't forget to subscribe to the channel and the notification bell as well. Now we will do a quick run through of the overall portfolio. The total value is pulled back a little bit, a lot more red in my portfolio to end the week. So it was down a little bit. I am in the red, I think by 1 or 2%, but it sits at $101,153.99. With the little bit of a pullback, the dividend yield has climbed up a bit. to 5.170%. So that's the dividend yield currently. And this, again, is what it's all about. The annual dividend income provided by the dividends paid out in the portfolio has continued to grow as I add new capital, as the positions within the portfolio pay out dividends. This snowball grows faster and faster and larger, and currently sits at $5,230.11 in annual passive income. You don't have to do anything except continue to hold the shares of the companies within the portfolio and collect the dividends. Now, as far as where we sit for the sector weights within the portfolio, communications is making up 9.48% of the portfolio, consumer discretionary 8.80%, consumer staples is sitting at 6.48%, energy is 8.47%, financials is making up 14.64%. Largest position in the portfolio is financials. Healthcare is sitting at 9.38%. Industrials have crept up a little bit. We saw with adding Owens Corning and adding Stanley Black & Decker, that has started to increase this, and as I add to those, we'll build this position out a little bit. But industrials is sitting at 2.37%. Technology sitting at 12.73%. Materials is sitting at 13.58%. We still do not have any utilities in the portfolio. We sold out of all the utilities as they had run up a little bit. But I am watching a couple, and as they hit fair value, usually during times we're in now where markets start to pull back, utilities and the energy sector does pretty well. So we will wait for pullbacks in those sectors, and then we will add them whenever they present fair value. And then the last position in the portfolio, REITs and real estates, make up 14.06%, and we still do not have any ETFs, though I do like SCHD, the Schwab ETF, dividend growth ETF there, which I'm looking at potentially adding to the portfolio. But there's so many other positions that have pulled back, I kind of want to wait, and I may add it to my children's custodial account before I add it to my own. Well, that is it. Those are the updates for the week. The dividends paid out, the purchases that I made. No sales this time around. I don't typically sell out of any positions unless the company fundamentals have changed. The stock has run up significantly and I want to take some profit, or they cut dividends, or their dividends are not growing. In those cases, I would be willing to take positions out of the portfolio because we want to see growing dividends. We want to see fair value. And in my opinion, unless things change, you should hold stocks for the long term and again, collect those dividends, that passive income provided by the portfolio. Well, as always, I appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Drop a comment down below. Let me know what you think of the video. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, suggestions for future topics, or constructive criticism. Go ahead and drop it all down below. This week is going to be a pretty big week. We have the Fed, and we will see what the Fed meeting, and we will see what they are going to do as far as interest rates, whether they are going to raise by 0.5 or 0.75 again. I do expect a increase in the Fed rate. It's just a matter of what that is. I think the market's pricing in a 0.5% rate. I would be leaning towards that. But if they happen to get a 0.75%, another large raise like that, I think the market will pull back significantly again. I think the market may react positively to a 0.5% increase because that is what they are expecting. But we will see this week. So be ready for that. Make sure you've got your powder dry and some funds sitting on the side, and pick up those stocks as they pull back and present fair value or undervalue. This is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes with those who take a vested interest. Hey, thanks for stopping by, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion. Investing journey for educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor. And this is an important one. Remember, my investing path is not going to be the same as yours. We're not the same age. We don't have the same goals. So make sure you are always investing based on your situation, your circumstances, and your selected criteria. Thanks for watching. We'll see you in the next one.